Germany's economy, once considered a beacon of strength in Europe, is now grappling with significant challenges that could alter its future trajectory. The country that has long been regarded as a global leader in manufacturing, engineering, and industrial innovation now faces a period of profound transformation. In 2025, Germany finds itself confronted with a range of issues, many of which are deeply interconnected and have far-reaching consequences for the nation's social, political, and economic structures. The situation is especially critical given Germany's central role in the European Union, where it has historically driven economic policy and acted as a stabilizing force for the region's finances. As Europe's largest economy, Germany's economic performance is not only of national importance, but is a key factor in the stability and prosperity of the entire EU. This places additional pressure on policymakers in Berlin to address the challenges at hand, all while navigating the complexities of global economic shifts and geopolitical tensions. A key issue affecting Germany's economy today is its trade relations, particularly with China. Over the years, Germany has become one of China's largest European trading partners, benefiting from strong demand for its high-tech products and advanced manufacturing. German companies like Volkswagen, Siemens, and BASF have built deep ties with China, relying on the Chinese market for growth. However, in recent years, these relationships have begun to sour. The global trade war, primarily between the US and China, has disrupted supply chains and raised tariffs, which has directly impacted Germany's manufacturing sector. As German exports face greater barriers in China, companies are forced to reconsider their dependence on the Asian giant. Additionally, China's own economic transformation is making it a less reliable partner for German firms. For decades, China's rapid industrialization created vast opportunities for German exporters. But now, as China's economy shifts toward more service-oriented industries, Germany faces diminishing returns in certain sectors. The Chinese government's push to develop its own high-tech industries through initiatives like Made in China 2025 has meant that Germany no longer holds a monopoly on key technologies, such as robotics and artificial intelligence. As a result, German companies are seeing increased competition in markets that were once dominated by their products. This changing economic landscape in China has significant implications for the future of Germany's trade balance, with German policymakers needing to rethink how they engage with China moving forward. Alongside these external pressures, Germany faces a series of internal challenges stemming from demographic shifts. The country's population is aging rapidly, and by 2035, over one-third of Germans will be aged 65 or older. This demographic transition presents an enormous challenge for Germany's labor market, which is already grappling with a shortage of skilled workers. As the older generation retires, the workforce is shrinking, which makes it harder for companies to fill vacancies in critical sectors such as healthcare, engineering, and construction. This skills gap is further exacerbated by the fact that Germany's education system is not producing enough graduates to meet the demands of the modern economy. In an attempt to address these labor shortages, Germany has increasingly turned to immigration. Migrants, particularly those from outside the EU, have become an essential part of the workforce. The refugee crisis of 2015 marked a significant turning point in Germany's immigration policy, with Chancellor Angela Merkel's decision to open the country's borders to millions of asylum seekers receiving both praise and criticism. While migration has helped alleviate some of the pressures in labor markets, the integration of these migrants into German society has been far from seamless. Cultural barriers, language difficulties, and the challenges of integrating refugees into the formal economy have created a complex issue for policymakers. Despite this, the need for skilled workers from abroad is undeniable, and Germany's immigration policy is expected to evolve to meet these needs, particularly as the country's population continues to age. Germany's public spending also remains a key issue. Historically, the country has maintained a reputation for fiscal prudence, adhering to the so-called debt brake, a constitutional mandate that limits the amount of public borrowing. This approach has kept Germany's public debt relatively low, enabling the country to maintain a strong credit rating and secure favorable borrowing terms. However, this strict fiscal discipline has come at a cost. Germany's public infrastructure, including roads, railways, and digital networks, is in need of substantial investment. The government has been hesitant to ramp up public spending due to concerns over breaching the debt brake, which has left critical infrastructure projects stalled or delayed. The COVID-19 pandemic, however, forced a shift in Germany's approach to public spending. In response to the crisis, the German government implemented extensive stimulus packages to support businesses and workers. While these measures helped prevent an economic collapse, they also increased public debt, reigniting debates over fiscal policy. As Germany moves beyond the pandemic, there is a growing realization that the country needs to increase investment in areas such as healthcare, digital infrastructure, and climate change mitigation. However, balancing the need for public investment with fiscal discipline remains a delicate task. Another critical factor shaping Germany's economic future is the ongoing energy transition. Germany's commitment to reducing carbon emissions has led to the Energiewende, a large-scale effort to shift away from fossil fuels and embrace renewable energy sources. While this transition is essential for combating climate change, it also poses significant challenges for the economy. The cost of renewable energy infrastructure has been high, and the country's reliance on renewable sources like wind and solar power has made the energy grid less stable, with supply often unable to meet demand. Germany's coal phase-out, for example, has left a gap in energy generation that is not easily filled by renewables alone, leading to concerns about energy security and the potential for rising energy costs. The energy transition has also placed a strain on Germany's industrial sector, particularly heavy industries like steel and chemicals, which rely on affordable and reliable energy supplies. The need to decarbonize these industries without compromising their competitiveness is one of Germany's most pressing economic challenges. At the same time, the EU's increasingly ambitious climate targets are forcing Germany to accelerate its efforts in reducing emissions. This transition comes at a time when Germany's manufacturing sector is already under pressure from global competition and the need to adopt new technologies, such as automation and artificial intelligence. Finally, Germany's role in the European Union and its influence on the continent's economic policies cannot be overlooked. The EU's economic stability is closely tied to Germany's performance, and the country's political and economic decisions often have far-reaching implications for the entire region. While Germany has historically advocated for austerity measures and fiscal discipline, there has been growing resistance within the EU to these policies, particularly in countries hardest hit by the economic consequences of the pandemic. The question of how Germany will balance its own fiscal discipline with the demands of other EU nations will be a key factor in shaping the future of the Union. As Germany grapples with these internal and external challenges, the future of its economy remains uncertain. The country's economic model, which has long been based on industrial strength, export-led growth, and fiscal conservatism, will need to evolve if it is to remain competitive in a rapidly changing global environment. The policies adopted in the coming years will determine whether Germany can successfully navigate its demographic and economic challenges, or whether it risks losing its status as Europe's economic powerhouse. In conclusion, Germany's economic situation in 2025 reflects a series of interconnected challenges: trade relations, demographic shifts, labor market needs, energy transitions, and fiscal policy that require urgent attention. While Germany remains a key player in Europe and the global economy, its future prosperity depends on its ability to adapt to these shifting realities. How Germany addresses these challenges in the coming years will not only shape its own future, but will have significant implications for the wider European and global economic landscape. If you found this deep dive into Japan's unique economic resilience insightful, don't forget to like this video. Your support helps us bring more quality content like this to you. Subscribe to our channel and hit the notification bell so you never miss out on our latest videos exploring global economics, finance, and world affairs. We'd love to hear your thoughts. Comment below and let us know what you think about Germany's journey. Do you believe other countries could adopt similar strategies, or is Germany's case truly one of a kind? And finally, Don't forget to share this video with your friends and colleagues who might be interested in understanding how Japan defied economic expectations. Thank you for watching, and stay tuned for more insightful content.